So, should we buy or sell the Match Group stock? First off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So, I have a theme that I call social artificial intelligence slash machine learning. Yeah, so these are AIs that work on, thick social data, which is quite different from AIs that work on like economic data, stuff like that, which is just different. But yeah, here is Match Group. They are in the dating business. 5% here from the lows, minus 73% away from the highs. On average, these companies have lost minus 61%, and that is significant. Here is their website. Seems like a new logo. Yeah, Match Group. Yeah, it's pretty good logo. It looks like two people. Yeah. Global presence, revolutionary technology, deeper connections. Yeah. Empowered connections through technology. So yeah, nice website. Let's jump right into the charts. Weekly data points. Um, I did not know that Match Group had been public for this long. That's interesting. Yeah, okay, so here is the chart. If we look at the most recent developments, the reason why this popped up on my radar is because this is a potential very major double bottom. So this looks just interesting. Double bottoms have a bit of a track record as well of working out. Here you had a bit of a double bottomish pattern that worked out really well for the bulls. This is definitively one to have on your radar if you are looking for bullish opportunities. On the dailies as well, it seems like this low from back here in 2020 is still holding. Looking at the RSI PPOs on the weeklies, we are emerging potentially from a very key level. So it's definitively a place of interest on these indicators as well. And the reason why I look at all of these different indicators is that the more people we can guesstimate what we'll do. So if we know what the MACD people will likely do, what the RSI people do, the moving average people, and so on and so forth, and we can sort of see like a primary sentiment emerge, bullish or bearish, then the probability of being correct is just, well, of making a good decision is definitively higher. So we do have a double bottom here. I think I will give the bulls an 8. But here's a caveat, okay? This 8 is of course contingent on this double bottom holding. If we were to break below, ruin the double bottom, then obviously this 8 would then be irrelevant. But based on the current setup, which obviously is the thing that is being evaluated, yes, it is frankly an 8. This is a very nice double bottom. And this is a stock that has a history of successful double bottom-ish patterns. Here is the seasonality. So from, the 17-ish of October, Monday, not the following week, but the week after that, that is usually where we would see a low. And we got some strong seasonality here heading into December. Looking to the left here over the last 5 years, then we do see that October is strong-ish, but November is weak, December is very strong over the last 8 years. It's a bit messy because October is one of the strongest months. November is usually a bit of a give-back month, but then December comes back strong. So overall, the seasonality is more bullish than bearish. I give the bulls a 4 here on the seasonality. It's interesting, but a bit messy. By the way, you can now sign up to join the newsletter. It's a absolutely fantastic newsletter. As far as this whole VIP thing here, the VIP thing here, it will go live pretty soon. I'm just making some modifications. Long term, it's primarily a recruiting tool, though, for me when I am planning on launching the ETFs and the hedge fund, because the primary income I have is definitively not from these kinds of things. But hedge fund and stuff like that—that's where you can get a lot of income. So yeah, and where you can be a part of it if you are very familiar with the method. So here is the fundamentals. We got number 3 hold here, C value, B growth, C momentum. Industry rank top 24%, but it's a strange category. Internet commerce. Yeah. Market cap 14 ish billion US dollars. Yeah, when we look here at the insider activity. Oh, this is interesting. In September, we have a lot of buys, accumulation. That's definitively what you want to see. Looking at the consensus estimates, we do see that 23 analysts are covering the stock. Average price target is 68% above us. Highest is 151%. Lowest is 24% above us. As such, I think I will give the fundamentals a pretty decent score here. I think I give them a 6. This is pretty good. So let's look at relative performance. We have 56% positive with S&P 500 long term, 97% with the social media ETF, SOCL, minus 83% with the dollar index, minus 40% with the 10-year yield. Daily data points, 80% S&P 500, 97% SOCL. Then we have minus 94% with the dollar index, minus 82% with the 10-year yield. So what happens with SOCL is going to have a big effect on match group. And here again, we do have something that looks very double bottom-ish. Double bottom-ish stuff worked well here as well. Double bottom-ish patterns worked here as well. So this ETF has a good history of successful double bottoms. That substantially increases the probability that bulls that are looking for some opportunities that they will buy this one. Is it guaranteed? Obviously not. But the pattern is too clear here. If I was a bear and I was looking for an ETF to short, and I look at the trend here, longer term, I wouldn't feel that comfortable like being like big short on this ETF. Here again, the purple 20-day moving average is successfully used by the bears to short. So the bulls, they have an opportunity, but they haven't really shown strength yet. We got a MACD buy signal here, but price-wise, we haven't seen much fruit. We are emerging from a very low level here on the PPOs and also the RSI, a sort of a level where you would expect some mean reversion to the upside. Here I am comparing the match group with the social media ETF. On the topic of double bottoms, you could argue that this is a bit double bottom-ish. It's interesting. The double bottoms, they keep showing up. Nice pun given the business we are talking about as well. The seasonality is also favorable to match group here. So this looks, very strong outperformance here from match group into, very sharp here from, February to into March. Let's compare the social media ETF with the S&P 500. Massive underperformance. We never underperformed like this. Very low regarding RSI. So you could say that we are abnormally underperforming. Hence, we are sort of like due some mean reversion to the upside. The seasonality does get favorable for social media from late October into late November. Yeah, I do think that we got some interesting data here on relative performance. I give the bulls a 5. We end up with a pretty strong 5.8 in favor of the bulls. The key entry signal stop loss is double bottom. So I am now, using more of this scale from -9 to +9. So that is why the numbers have been a bit bigger lately. But that is because that is just something I had to change, because I saw that I got into the pattern of using too little of the scale. So I'm just widening the scale a bit, and that is important. You see it also with movie reviews and stuff like that, is that very often a very limited portion of the scale is used. Like if you look at analyst recommendations, you usually see that a lot of it is hold in the middle instead of actually forcing yourself to make a decision. So now we are going to look at some of the stocks in the social media ETF. Here is Twitter. The acquisitions, here again, it seems like it will go through. That is good. I do think that Twitter will be quite a game changer under Elon Musk's leadership. It could, yeah, I think if there was anyone who could do to Facebook what Facebook did to MySpace, it would be Elon Musk taking over Twitter. But it will be take some time to really change the platform. But based on the ideas he has proposed, it certainly sounds very interesting, and like he has like bigger plans. It's not simply that Twitter will be like some kind of like a journalism 2.0 thing. It will be something more substantial. Next is Facebook or Meta platforms. Double bottom potential here. Like we had this, right? Double bottom, but the bears, they broke it. So that's an issue. You could argue that we have fallen down to another potential support level. That's a point of interest. But yeah, Meta is it's been a bit messy, because when a previous support level recently broke, it makes it more difficult for investors to commit. Here is pin interest. So we do have a pretty good rounding bottom here. Nice rounding bottom. We have gone now from having the red 200 day moving average as resistance to now becoming support. We have broken out above it. That is definitively bullish. Rounding bottoms is something I do prefer to buy as they are forming. We are now 44-ish% above it, the low. You can of course buy a rounding bottom later on when you have like confirmation, like the 50-day moving average in green becoming support. But yeah, I prefer to buy support. Buying right after a breakout, very mixed experiences with that. Let's look at Baidu. So the thing is that Baidu, it is at a low level that has attracted bulls in the past. If we go here to the daily data points, it's a bit erratic. You see that there are quite a few sharp moves, like back here, here, and here. The purple 20-day moving average is a clear resistance level. So it's one of those charts where there is a bit of noise, and I prefer to have as little noise as possible. Here is NetEase. So the red 200 week moving average, it's a clear resistance level. Yeah, so we do have that to contend with. On the dailies, the 20 daily moving average is the key resistance level. Looking at RSI and PPOs here on the weeklies and the dailies, we are emerging from a level that has attracted bulls in the past, but this is also one of those situations where you don't have a very clean signal. Yes, we do have some kind of support, some bounce-ish levels. Then again, we have horizontal resistance above us, and also moving average resistance. And when you have these conflicting signals, then you will have bulls make moves, bears make moves, and they sort of can cancel each other out and weaken signals for both players, and that can create a period of more erratic behavior, which will make it very difficult to put in stop levels. But yeah, we have done a bit of a deep dive into Match Group, looked at other companies in the social media ETF. So all in all, definitively interesting setup here for Match Group. If the bullish thesis plays itself out, then there could be some pretty substantial upside.